Good morning, YouTube. Good morning, X. We're multicasting today on both platforms. How's everybody doing this morning? Let's take a look at the market. It was selling off last time I looked, which was like 5 minutes ago. It was doing well last night. I woke up in the middle of the night and checked it a couple times, and it was balanced. Seemed to be doing all right then, but the Bears came out of the woodwork on the open, evidently. Gosh darn it. Or maybe somebody tweeted or something. I don't have CNBC on today. I've been working on a different project and trying to stay focused. That's not a pretty sight. The Bears took out the previous day's low, or the previous 2-day low, really. They're down here in this gap where we might expect buyers to be there, but we'll see. But anyway, that's definitely the Bears. The Bears definitely have the ball and are driving down the field. And they've already made a first down, and it's only 9:15 or 10:15 your time. All right. Well, at least I'm sharing the screen. Let's see if it's Bitcoin's fault. I would imagine it is. Well, down 1.63. Jackson, what are you doing? Just calm down. You got food, buddy. Here, let me see that. I love how Jackson brings me his bowl that whenever he wants food, but this isn't his bowl. This is a spare bowl. He goes out and found somewhere where I keep the spare bowl. Jackson, you have a bowl over there that has food in it. Hang on, I'm just going to put his food in this bowl. How about this, Jackson? There you go, buddy. See, this is his normal bowl. I give him this one so he doesn't overeat. I give him a smaller bowl, and I try to watch his, but he likes the bigger bowl sometimes. All right. Well, yeah, this doesn't look, it's not off to a great start, but hopefully they'll buy the dip and turn it around by the end of the day. We need the Bulls to get back in charge of this thing. But the crypto bears, just looking at the moving averages, have been firmly in charge for a while. And I just think that's weighing on the overall market. Let's look at the pros to Joe's indicator. This doesn't look great either. Both moving averages are red and sloping down, and today's price is underneath the lowest moving average. That's as full on bearish as it can be. It was the same condition we were in back in, February 19th or something. It gave the same look. And it stayed in that same look while we went down and even while we came back up a little bit. But anyway, The thing is, though, the other day, October 16th or October 10th, it did the same thing. It was full on bearish, and that was actually a buying opportunity. It actually bounced from there. Then it gave another full on bearish on October 16th, and that would have been a bad place to sell. In hindsight, in fact, it would have been a good place to buy. So hopefully, this is just hopefully it's the same thing and it doesn't turn into a multi-day situation where it stays like this. That's how downtrends start. We'll monitor it though. So that's the VIX versus VIX, but the VIX divided by VIX, basically. Pros versus Joes. Pros are the VIX and Joes are the VIX. All right. So I guess we should look at Qs also. Then we'll go to the terrific trio. Gosh darn it. Well, anyway, the Qs are testing this. There's another open gap down here. Maybe they wanted to fill it. And more importantly, here's first down for the Bears. Or the Bears already have a first down, taking out this low, taking out the previous 2 days low. That's a first down. If they keep it under there, they definitely have the ball and are driving down the field. But they can make another first down and keep their drive alive if they get under this breakout level, and especially if they close there. We had like a little local top, and then we broke out, gapped above it and stuff. So hopefully we're going to find buyers in this gap. Everything will be all right, but that remains to be seen. But if the Bears close it on the other side of this, they're driving down the field and trying to score a touchdown. And a touchdown would be taking out, I'd say, a 30-day low or something. Here we are at what are we, November 5th. Let's see where the 30-day low is. Right here. I mean, we definitely don't want to see that. October 5th. Okay, well, the 30-day low is right here. So, and there's actually another gap down there, but that would not be a good look. But I mean, if you wanted to buy the dip and it gets down there, it might, maybe the bulls will grow up here and start doing something here. Anyway, what are you guys doing today? Is there anyone in here? 24 of you guys. You got to be kidding me. Gosh darn it. We don't have more mods. We don't have anyone that's not a mod in here. I think you guys are all managing mods too. You are. So, I mean, that means you can do anything I can do, I think. But anyway, I'm just joking. But no one misbehaved today because we have the mods on duty. Hey, Marcus. Hey, Rod. Hey, Dan. Hey, everybody. Okay, so let's look at the terrific trio. I know I have a lot of windows open, but there's something in all these windows I want to show you, believe it or not. Maybe not this window. But there's something I want to show you. I have projects I'm working on, and I just leaves the tabs open, and we're going to go through and look at them. All right. So the terrific trio, let's look at blocks. Oh shoot. I just remembered something. I'm trying to think if I updated this. Let me do that real quick. I'm getting ready to replace the terrific trio with something better. That's what I was up late working on. I woke up early this morning. I've been working on it. It's the reason I don't have the TV on. All right, so we're up to date. So here we go. All right, terrific trio. We'll start here with old blocks. Here's their list of stocks and their allocations, but I like graphical versions of this. So first of all, blocks is down 5%, 4.89. This is 15 minutes delayed though, but I mean, it's probably pretty close. The average is down 3.84. So kind of true to form, blocks is performing a little bit worse than their basket. That's kind of what they do on both sides. Yesterday they had their basket doubled on the upside, but the basket's down 3.84. So, and there's not one thing that's up today. So that I'm glad I didn't buy. I thought about buying ULTI yesterday. I need to get in, but I told myself I'm going to wait for a down day. So maybe today or tomorrow. If we're down big today, we might continue to be down tomorrow. Also, I might follow through into the end of the week, but maybe today or tomorrow, I'll use that as a chance to buy the dip. In any event, yeah, this is not great news. It looks like he has 28 plus 8, which is, what is that? 28 plus 8 is 36. He has 36% in his, I'm going to call it his long crypto basket, between Ethereum, HODL, and FBTC. I swear it used to be like, maybe it's always been, I thought it used to be more. I think it used to be like 45%. Anyway, let's go look at something else. LFGY, this is probably not off to an auspicious start either. I bet it's doing better than GPTY, but we'll see. It may not be. Yeah, it is. And it's down a little bit less than the basket, but not much at all. So, LFGY, not one stock up in their portfolio either. That sucks. And of course, Alti's going to protect capital better than those two just because of math. Sure enough, it's only down 1.38. Now, the other side to that was when the market ripped up yesterday, Alti, I think it was down all day. I don't know if it finished up. No, I think it finished like down a third of a point or something. So, that's not good because like blocks was up a lot yesterday. Yeah, sure, it's down a lot today, but Alti was down both days. But it's only down 1.3 today, where their basket's down 3.4. Like I say, that's why that's one of the best things, or it's probably the best thing about Alti is the protection of capital on the downside. Unfortunately, it protects your capital on the upside too, in a bad way, or in a non-desirable way. But that's the trade-off you get with this one. Look, at least these guys have one stock that's up. That's more than we can say for blocks and LFGY. These guys have Lucid in here. I saw yesterday. Let's see, they have Bitmine Immersion, Palantir, Rigetti. I could have sworn I saw they had Netflix, but I'll look into that. All right. So, and then for some reason, it's not getting all the positions. These are some of the positions in ULTI, but anyway, this is what I was working on fixing. But ULTI, or not this exact thing, but I'm going to be able to show these a different way, probably a better way. This looks about, par for the course. It's not all the positions, but that's actually what ULTI is down. So it's down 2.82, more than ULTY, but less than blocks and less than LFGY. So that's good. ULTI also showing some downside protection versus LFGY, and it's showing more downside protection at this early point in the morning compared to LFGY and blocks. Now, KYLD, let's see what this thing's doing. Once again, this isn't all the positions. For some reason, AI can't parse it, but these are just the first 4 positions. Anyway, and it's showing KYLD's down 0. I don't believe that either. So let's go back here. Let's go back here and look at KYLD this way. K-Yield, I'm sorry, Howard, if you're watching. Yeah, it's down 1.67. Anyway, that's good. That's not protecting capital as well as ULTY, but it's pretty close. I mean, ULTY is 1.3 or something. This is 1.6. Great job, Howard. Good job. ULTY and K-Yield are the protection champions this morning. They're the ones that are playing defense, at least at this point in the morning and on a relative basis. Let's look at QLDY right here, and then we're going to go and look at the cumulative performance. This one's, it's only down 1.18. I mean, that's not too bad, but it's about 30% more than the Qs are down, but it's a lightning spread. So that's kind of par for the course. And at least it's not down as bad as the other ones, right? All right. So let's look at the lightning spread report. So I'm kind of really liking this report. I mean, I like that you can see the cumulative return over time against the benchmark and the parent. So I'm building something like this, but it's going to be for ULTI, ULTY, blocks, LFGY, all the ones we normally talk about, and this too. And it's good. So it's going to track the total return of all of them against their parent. It's going to be called high yield basket cases. And I'm just building out the logic of it right now. I have the data in here. The only thing that makes it hard is that these all pay dividends on different days, and you have to put the dividend in here. By the way, we're going to track in the same way that the lightning spread spreadsheet just tracks the lightning spread. We're going to track ULTY. We're going to track the best funds, or my favorite funds, the basket companies, blocks, ULTI, K-Yield, WPay, QLDY, LFGY, GPTY, and Chippy. And I could throw YMAX in there too. It's WPay is not really a basket company, but so many people like that and stuff. I thought if nothing else, it's good to have it in here for comparison. And I might have to throw YMAX in there too. Hang on, it's my dad texting. I don't want him to worry about me. Let me just tell him I'll text him back. All right, appreciate your patience. So let's do this. I kind of read it fast. I hope it. Okay, I'll look into that later for my dad. Maybe he's even watching the show. Who knows? Hey, Dad. Probably not, because you wouldn't have texted me. All right, so let's look here at. Anyway, I'm going to have this built, but this is the high yield basket cases. Probably need to add YMAX, but then we're going to have like 10 of them we're going to line up. we're going to track the cumulative total return. And not only that, we can also track, because I'm always saying, ULTY protects capital better than all these, and it does just mathematically. But we'll be able to see that because I'm also going to track the and it may not do it than all of them on every day. Look, today the Champions QLDY is actually protecting capital better. But I'm going to track the daily change of all of them. Then I'm going to track the cumulative total return, all of them against all of them, and also against the SPY and the Qs. So I think that's going to be a lot more engaging content. That will be out soon, and that'll be out soon. So I'm kind of excited about that. I hope you guys like that. Hey, we got Chad here. We got Redfish here. And all right, well, the party can start now. So let's look over here at the index buffer report. What do you bet that feed and 5-year down the most in yield max land or in SPY land? And then what do you want to bet that blocks is down most in Q land? And in Russell land, who knows? Yeah, look at feed and 5-year. These things are, 3.2 and 3.6 when the market's down, 0.5%. My gosh. Anyway, but that's what that concentration does for you. Good on the way up, bad on the way down. Anyway, look at old Salty there. Should have bought Salty yesterday. I'm just joking. But maybe I should have. Well, I guess time will tell. Anyway, so, nothing's doing great in Q-Land. Y-SPY, which did really well yesterday, and it also did all right on the 2 days ago when the market sold off on a relative basis. Well, anyway, it's finally coming back to reality. It's tripling the market. Even SPY T's leading on the way down. Even T-SPY's leading a little bit. So WTT, all right. Well, and then in NASDAQ land, it's pretty much the case. It usually goes blocks, LFGY, then ALTI. So yeah, blocks, LFGY, and then ALTI, right? Oh no, then WPay. Yeah, I forgot. WPay is usually next, and then ALTI. Yeah, ALTI is 1.3. So it's losing less than, about half the rate of WPay right now at this early point in the day. It's even protecting capital better than GPTY, which is a good one. And it's even doing better than SEPI this morning. So those are those puts working for you. All right. So YQQ's up, of course, in Russell land. What do we have over here? TLTW's blowing up. I heard the government injected, or the Fed injected money last night. Maybe bonds are rallying today. Evidently, they're rallying today because TLTW's killing it. All right, so that's that. Let's look at the Yield Max Buffer report, which is the worst report I have. I need to just stop showing this one or put all the stocks in it. This is only about half the Yield Max stocks. There's no Carvani. There's no Hui. Anyway, I need to work on that one. But I'm just not as interested in this one. But man, look at Murni. Would you take a look at that? It's up twice. It's up twice of Moderna. Man, that's got to be a bad print or something. I doubt that'll. We'll see. I'm not going to get that excited about that. But then on the downside, these are, they're showing some buffer, but not a lot of buffer. And OARC is leading the parent on the way down. The parent's up, OARC's down. Could have probably paid a dividend that wasn't factored into this charge. So, it may not be the end of the world, but anyway, it's just not good news for many of these high beta stocks today. All right. So let's look at something else now. I got something for you. I'm going to look at these windows. All right. So last night there was but it is definitely by the dip day. So I'm going to probably wait till the end of the day, and hopefully I almost got some ULTI the other day in the big pullback, but I chickened out. I wanted to wait for the market to stabilize. Right now at this point, it's looking like a smart decision yesterday I was thinking, man, I think I missed it, but I was wrong about that. How do you access the dividend calculator? I don't really have one. All I'm doing here, though, anyone can do. I'm just using a spreadsheet, and all I'm tracking is the daily price. So, and I've started them all on the last day of October to give them all an equal starting place, even though ULTY has been out for a long time. But ULTI and K yield, I really want to get a handle on how they're treating risk. So anyway, all I do is I plot the daily price out, and then when there's a dividend, I throw that in. So like, then I don't have the total return calculated yet, but it's just a simple calculation. It takes like if we were doing the total return for 11.5, it would take 470 and subtract 496. So that would be negative 26 cents. But then it would add in, then it pluses whatever's in the divvy column. So then it would be plus 7, but still that's down 19 cents. And then I would do that as a ratio. Maybe I could release it or something and sell it for $5. I'm looking for something like I am looking for a product. I just don't have any product out that's cool enough yet that I want to put out there. But anyway, I'm going to show this every day, and it's not too hard to do. But I don't really have a dividend calculator per se. My favorite thing I have is the max factor, and that's more of a total return or a risk versus reward calculator for these high yield funds. All right, so let's look. Okay, what did I want to show you guys? Yeah, there was some controversy, and they tagged me in the comment. Somebody was saying on X last night. Let's just go look at the comment. These guys, it's not that interesting. Now, forget about that. We'll look at that for now. But for anyone that missed the max factor last night, I wanted to show it to you guys, and I have the table out, the full table, in case there's any questions that you guys have. But the data factor show was last night. We looked at NVIDIA. We looked at NVIDIA surrogates and NV21, NVDW from Round Hill came in second, then YieldMax, and then Granite shares. This just kind of measures risk-adjusted reward, and it does it, I think, in a better way than total return does. Total return's a little bit deceptive, or it can be. And then we also looked at the MicroStrategy surrogates, and this darn preferred stock Stretch is just killing it. It's a MicroStrategy's preferred stock. Probably not fair to compare it to the covered call funds, but still, I throw them all in together. So it definitely won. But if we want to look at just the covered call funds based on strategy, MS2 won. MSTW came in second. So that was the same order as the NVIDIA, the NVIDIA finish. And then let's look down here and then I did a Coinbase one too, somewhere. Maybe I shut the Coinbase one. I didn't mean to, though. I meant to keep it open. I like to go over these for people that weren't up last night. That's an old one. Anyway, I'm sure CO2 won. I mean, Rex is doing really well, at least according to the max factor. Let's get this Coinbase fund out. Daily factor. Oh, there it is. Or the Coinbase sheet. Okay. Yeah. Rex won. CO2 won 57% yield and way better NAV return than all the other ones. And it's not very stable, but none of them are very stable. So, I mean, anyway, all right. So I wanted to show that. I did want to talk about that Twitter comment, but I was just going to show something in option strat. There's some kind of argument that broke out. People were saying that, I guess somebody posted, somebody that wasn't me posted, YieldMax, and they were doing a thread or whatever, and they were saying, YieldMax has capped upside, and they trade that. And then some other person tagged me in it and said, no, it's not capped. And they tagged Ambassador of Quan, and I don't know how I got involved. I thought they were referring to me. I always call it partially capped. But anyway, here's the long and the short of it. They're right. If managed early, it's essentially not capped. If it's held till expiration, the YieldMax strategy, and I just pulled out an example of it. This expires next Friday. They own stock, and well, they would do it with the synthetic, but it's the same thing. For the purpose of this, I didn't want to do. I mean, I could make it a synthetic anyway. So it's long stock plus call spread, and that's what the person was saying in the comments. They said no, they sell verticals and they're uncapped, and they aren't all the way uncapped. I mean, they're uncapped from the price where they sold the option at to the first strike. And then they are capped for a while until they get to the back strike. But then I started thinking about it, and they usually do manage early. And so if you manage early, okay, so I did that on this page. I just took the options off of here. And now, so this is just the red and green line is stock by itself. And the white line is the yield max, the yield max, covered call spread strategy. And, on the way down, yield max does a little bit better. On the way up, they aren't capped. They do give up a little bit, and it's due to that flat spot. It's because there's no free money. But they're basically uncapped. Now, if they hold it all the way till expiration, then you can see the white line right there. They do have the flat spot, but if they, so compared to stock, they're giving up quite a bit there. If it's up 7% and they hold it to expiration, so they're either partially capped, but even if they just trade it the day before, so this expires next Friday, if they go to Thursday the 13th, that the profit loss graph doesn't have a flat spot. It's essentially very similar to stock. So, if, in other words, if stock's up 10% by itself, you'd get $2,600 profit. And then we could go back here. And if this thing managed on Thursday was up 10%, you would get $2,000 profit. So you leave 20% on the table because there's no free money. So they aren't uncapped, but they are partially uncapped. And the earlier they manage, it's almost, if they manage really early, it's almost like stock. If they do something and they do this lots of times, if they do something on Monday, there's even less give up, and it's basically the risk and reward of stock. So it's a genius plan, not totally uncapped, but it is partially uncapped. So I wanted to address that in case anyone else was wondering about that. All right, what else is going on over here? So David, I don't know if I've seen you around here before, comparing cues, etc. Oh yeah. Okay. Now I do want to put that one out. That is one I said I was going to release. It's going to be a pain to make, but if I may do that, and like some influencers sell e-guides. I don't have any e-guides. I don't have a subscription service. But yeah, I was thinking that might be, because I think other people might be interested in that. But the reason I didn't put it out yet is because I want to make sure it's totally accurate. I mean, what that was, it was the dividend calculator that showed, if the Qs were up 50%, how much, it was actually a NAV. It was actually calculating ULTY's NAV. And I was using a linear regression and going off past results and showing what the Qs would have to do to make ULTY's NAV go up or stay flat. And then in an average year, it looks like the NAV's going to drop 50 to 60%. So yes. And I talked to someone in the comments, maybe as you, and I said, but here's the thing I wasn't sure about. I think in the broad scheme of things, I think that's pretty close. I had AI help me on it and stuff. But what I need to do if I wanted to put it out, I was just doing yearly calculations. I need to do weekly calculations, and it might have a difference on the outcome a little bit. So that's the hang up on that. And so now I have this project going that I'm really excited about, this high yield basket case project. But yeah, as soon as I get done with that, I did, and I told somebody I might put it out and charge a nominal fee like $5.99 or something. But I have to get it up to snuff. But yeah, I'm still considering that. And that was a good calculator. If you have a question about it, I can pull it up and I can show you what I have. I'm not going to sell it and then make, and it be totally inaccurate. But if you give me a question, I can look at it. The other thing is I'm going to keep adding to it. I did 1 year's worth of data at a time, but I used I used a rolling period. So from April to April, March to March, well, now we've had another month go by, so I can put that data in there and throw that into the regression, how it's done in say November of last year till November of this year. So I'm going to keep updating it to make it more accurate as I get more data. But also I really need to show the dividends coming out weekly to make it really something I think that's valuable. But yes, I'm glad you mentioned that. I will work on that. Hey, Sols, how you doing? WPay's getting close to an all-time low. Well, I mean, it's not WPay's fault, in my opinion. Come on, WPay. Let's go back up. All right. Well, where is I was hoping old Mayor would be in here today. Remember yesterday we were talking to Mayor, And anyway, in the middle of the night last night, I woke up and I remembered I made kind of an inappropriate comment. And I if it offended Mayor or anybody else, I made a joke, and I'm not going to repeat what it was, but I woke up and thought about it. We were talking about something and I blurted out something kind of inappropriate. Anyway, Mayor, if you're listening, and I'm sorry if I offended you or anyone else, I didn't mean to. It's just kind of a bad joke. I kind of have Tourette's, or I kind of just say whatever I'm thinking, like I weave into other lanes, we weave around here. So anyway, my apologies if whatever I said offended somebody. I didn't mean to do that. So anyway, hopefully Mayor's wife, he's not here. Hopefully he's watching, and hopefully he either didn't hear what I said or he's not upset about it. Hey, Thomas knows I can, yeah, I know it. And I thought I did too, Thomas. I got the video out. And then people started asking, will you do this? And yeah, I thought I did too, Thomas. So I'll tell you what, I'll fix it and then I'll send it. If you don't mind, I'll send it to you for free, obviously, if you want to take a look at it. Thomas is kind of a good, if you want to take a look at it and try to shoot holes in it, that would be great. I'll do it this weekend and send it to Thomas. And if we can get something that Thomas thinks is valuable and I think is valuable, then I would absolutely be willing to share it with friends. But absolutely, I don't have a degree in engineering or math. I'm a political science guy. So yeah, but I was using AI to, I kind of knew enough to be dangerous, but yeah, I would like to run it by a person that has a background in science, engineering, that kind of stuff. So yes, I'll get on top of that. And Thomas is, Thomas has been one of my longest subscribers and commenters. So yeah, hit like and subscribe if you don't mind. But yeah, Thomas helps me out on lots of stuff. I'll bounce stuff off him, or he'll send me a note if he hears something that doesn't sound right. And I appreciate you, Thomas. Yeah. So, hey, Chad, anyway, I'm glad that you guys are here today. All right. So if anyone sees Mayor or knows him, tell him I shouldn't have made that comment yesterday. In any event, I'm trying to think. I really don't think I have much else to talk about, unless you guys have a question about the daily factor. I have a new index. I showed you guys my stable index. This measures the relative stability to the market of these funds, and one is market stability. So, so like CEFS, this closed-end fund, it's 89%, or it's 1.8 times as stable as the market, or 1.9, I guess, if you round up. Well, anyway, but stability is not everything. Some of these are overly stable and they have either bad total return, bad NAV return, or not. The stable ones usually don't have bad NAV return, but stability is not the only thing to look at. So I looked in this, the safety factor measures return per unit of stability. And anyway, these are the top ones: Goop, iGold, TSLP, Spin. Spin kind of surprised me, but even though it doesn't pay a lot of yield, it has really decent NAV return when you factor in the stability also. So anyway, that's something new I'm looking at. It's not an input in the max factor. It's just it's a side thing. It picks things up. The max factor it's the max factor. It picks stuff that I like. I want the most yield I can get at the reasonable price. The max factor's distributions at a reasonable price. This is for people that's like, yeah, I mean, I want distributions, but I want everything. I want total return, and I also demand stability. I'm not gonna settle for something that's going to pay 90% and be down 80% on NAV. That's not, and that kind of thing would be at the bottom of the stability factor. So, and look what's at the very bottom right now: ULTY. But then XBTY, I missed, Y triple Q. Now that's an inverse, but that might anyway. But AIYY, MISTY, MSTW, USOY, they have very little stability, and even when you factor in the return, so all that, so it's just a new metric I'm looking at, but and it's part of the daily factor show. So that I'm going to have that show on at 7 tonight. Tonight, let's see what we're going to look at. We're going to we haven't done just a SPY and a Q surrogates. I'm going to line up T-SPY and SPY-T and all the SPY surrogates that are direct Y-SPY and all those. And then we'll line up the Q surrogates, QDT, QDTY, triple QI, IQQ. We'll line them all up and we'll run them in the max factor. We'll look at the safety factor. I need to work on the branding. Safety factor is probably not the best name for this. But I really do like the stable dex. It just measures relative stability, but this is a qualitative or a quantitative metric. How stable is this, or has this been over the past 90 days relative to the overall market? The safety factor is more, I try to make it more qualitative. Anyway, so I'm excited about that. But yeah, so those are my projects. We'll do the daily factor tonight. I'm going to keep working today on this high yield basket case. I have an appointment tomorrow morning, so there's not going to be a morning show tomorrow morning, but we'll have an evening show tonight about 4 or 5 after the market closes, and then at 7 we'll have the daily factor SPY index edition, index Thursday, and I think that'll be a good one. And then, yeah, tomorrow, no morning show. But let me get out of here, and I'm going to go. This high yield basket case, I think, is going to be pretty cool. Because wouldn't it be cool this little thing, I like this report, and I think it'd be fun to apply this to all of them. And so we can see, how they're doing relative to each other. And especially it's going to be fun because we have ULTI and K yield, and it's kind of hard to get a handle on what they're doing and how they're protecting or not, our capital. So, but then, yes, then this weekend, I will finish that dividend calculator. It's not going to be that hard. I just need to do the calculations weekly. And then I might even make content on it and all that stuff, Thomas. All right, guys. I'll eventually, I'll get it to if it passes, I'll get it to you guys, or get it to David. If it passes, I'll get it to you guys. But the long and the short of that story was, if you aren't comfortable with losing half your NAV every year, that, ULTY is probably not the fund for you. But I bet you there's these other, I could also apply that same metric to other funds. I bet there's other funds that'll probably lose 30% of their 40% of their NAV on a yearly basis. That's just kind of the way these ones that pay 80, 90, 100% work, unfortunately. But it's, all right. So it is a new all-time low for WPay. Well, I hate to see that. Anyway, all right, guys, I'll be out of here. I'll be back. I'm going to get out of here and go do this stuff. You guys have a wonderful day, and I will talk to you later.